Hey there, YouTube. So in this segment, I wanted to cover the question, where should you set up your LLC, right? So if you're starting a new business, you're a new entrepreneur, and you're looking to launch your entity, always the first question you ask for the most part, right? Where do I set up my LLC? I hear everybody likes to go with Delaware. Do I need a Delaware entity? If I go with Delaware, what additional filings do I need? So I'm going to go down a list of kind of the main points, and hopefully that'll help steer you in the right direction. So the first option is always just set up an entity in the state you live, right? So if you live in Florida, use a Florida LLC. If you're in Georgia, use a Georgia entity, and so on and so forth, right? So what are the positives with that? Well, for the most part, it means that you only have to be registered in one state and pay one state filing fee, right? So if you're in Florida, you set up a Florida entity, you're only paying the Florida LLC annual filing fee every year, right? If you're doing everything from Florida. The other benefit is you can be your own registered agent if you want, right? So wherever you set up your entity, you have to appoint somebody that's physically located within the state to serve as the registered agent. So that's for service of process reasons, right? If you're sued, they need to know where to send those documents. So if you live in Florida and you set up a Delaware entity, you can't appoint yourself because you live in Florida. So you need to pay a registered agent in Delaware an annual fee to serve as a registered agent. So those are the two big positives when you just go ahead and set up an entity in your home state. The drawbacks, well, depending on where you live, every state has different LLC statutes, right? Some states don't offer as much liability protection and privacy, anonymity around who owns the entity, unlike some of the other bigger names, right? So like the Delawares, the Wyomings, the Nevadas, these are states that their state statutes are crafted to provide the most liability protection to the owners and the business. And they also have, for the most part, pretty private databases. So if we go back to Florida, for example, in Florida, when you set up an entity, there's a state database, sunbiz.org, where they list all of the entities that are set up in the state. You can see who are the owners, what are the mailing addresses. And so if you want a little more privacy when you launch an entity, then maybe Florida isn't right for you, right? Because you've got to disclose all this information. For the liability protection side, obviously, if you set up an LLC, it's going to provide you some protection. But where some people run into trouble is with this single member LLC. So LLCs provide a lot of protection if there's more than one owner, right? So if you have a multi-member LLC and one of the owners is sued personally, the creditors can't come in and be a partner of the entity to take their interests. They can't invade the LLC assets to sell the assets and take the cash to satisfy a judgment. So that's the protection provided by a multi-member LLC. Single-member LLCs in the vast majority of states don't provide that type of umbrella protection. So what they do is what's called, you have a charging order protection. So in most states, the most that a creditor can do if they sue an owner is place effectively a lien on the LLC units, right? So if cash is distributed out to an owner, the creditor can take that cash. But if no cash is distributed, nothing happens. It's just a lien. For single member LLCs in most states, that's not their only remedy, right? So if you own 100% of a Florida LLC, for example, charging order protections are not the only remedy. A creditor can actually go in to the entity and take cash out of your accounts, have assets sold to satisfy a judgment. That's the one kind of kink in the armor with a single member LLC. Now some states, Wyoming, Delaware, I think two others, they actually have statutes that provide the same protections for a single member LLC. So if you have a Delaware entity and you're going to be the sole owner, you get the same type of protections as a multi-member LLC, let's say in the state of Florida, for example. So that's a big one, right? If you're concerned with liability protection, and you're going to be the only owner of the LLC, then maybe going with a Delaware or Wyoming entity is good for you because you know you've got that additional protection. If you're indifferent to that, then you could just go with a regular LLC in the state where you live and then just call it a day. So that's the big ones on just forming a state, so an LLC in the state where you live, positives, drawbacks. The other alternative is actually just going to another state, like I've been noting. The positives, the liability protection and privacy laws, right? The same thing. Just to recap, kind of what I already talked about. If you go with a state like Wyoming or Delaware, you'll get the single member LLC protection. You get a little more protection just under state law. And then the anonymity thing is also important, right? So Delaware, if you go to their database, you can search for a Delaware entity, but the only information that comes up is the entity name, when it was created, and then where the registered agent is. And then on an annual basis, when you renew your Delaware entity, you're not filing a kind of annual report or franchise tax report where you're disclosing any ownership information. You really are just paying a fee. So you log in, it's a $300 fixed fee a year, you pay it, and that's it. So a lot of privacy protection if you go somewhere with like Delaware. Now the drawback is if you go with an out-of-state LLC, it effectively creates two registrations, right? So if we go back to the Florida example, if you're in Florida and you got your business in Florida, but you decide to set up a Delaware entity, you're paying that fee to Delaware every year, you're paying the registered agent fee, but because you're engaged in business in Florida, you've also got to be registered in Florida as well. So it's almost as if you just had a Florida entity anyway. Obviously, you're okay with the additional cost if you're really concerned about, right, the liability protection, the anonymity at the state level. But if you don't want to pay double fees every year, then maybe don't go with Delaware, right? Just set up an entity in your home state so you don't have to register twice. And then the third option is use a tiered LLC structure. So this one, for example, if you're in Florida, you can open a Wyoming entity that you own 100% of personally. So again, that's creating that single member LLC protection. You own the Wyoming entity, you got the privacy in the state database, and then you open a separate Florida LLC that is in turn owned by the Wyoming entity. So you've got this tiered structure where you own 100% of Wyoming, Wyoming owns 100% of Florida. So you've got, you know, some additional liability protection there. The other nice thing is when you do register in Florida, you can use the Wyoming LLC's name as the owner and its address. So it keeps your name off the public ledger. So that's how you can create some privacy if you're in Florida or if you're in a state that has a public database. So you definitely have some options, and a lot of it is certainly cost conscious, right? When you're just starting, you're thinking, okay, I just need to get something open and get this thing going. If you have a little bit of a bigger budget, then maybe you want to look at something like the tiered LLC structure. Certainly a little more costly, but it's a better long-term solution, and it provides you, it definitely provides you a little more liability protection than just a standalone entity, depending on what state you're in. For tax reasons, there's not going to be a lot that changes here. Whether you set up the entity in Delaware, Wyoming, your home state, you're still subject to federal income tax, right? So your LLC is, let's say, filing a tax return with the federal government every year. It doesn't matter where you go. The nice thing about states like Wyoming, they don't have any state income tax whatsoever. So if you set up a Wyoming entity, you're only doing a federal filing. Delaware is the same way as long as you don't have a Delaware head office. So if you set up a Delaware entity, you don't need to file state returns there unless you are actually, you know, have an office and you're doing business there. I would avoid, you know, if you're in Florida, avoid setting up, let's say, an entity in New York, right? It doesn't make any sense. New York is going to require a filing at the state level, even if you have no nexus there beyond just having the entity set up. And other states are the same way. New Jersey, Pennsylvania, these are the states you want to avoid if you have no presence there whatsoever, right? So if you're in Florida, if you're in Texas, go with Wyoming, go with Delaware, but avoid those other states that would require a filing no matter what. So yeah, I think that covers all of it. Thank you for watching. And of course, if you have any questions, leave me a comment below. Happy to answer them. And of course, always appreciate a like on the video. Subscribe to the channel if you aren't already. And I hope to see you again soon. Thanks.